Okay, good evening, everyone. Welcome to the trade findings and adjustments for Tuesday night on, let's see, it's 03/05 of 2019. I'll be honest with you, I kind of thought, crap, markets are down again, and they're down on good news. But there's a couple things I want to touch base with you right now. I've shown you a small portfolio that started out at, I think it was 27,500 this year. It is my taxes portfolio because I almost put had, right? I didn't have to because I sold a house, paid lots of things off, and will have a huge passive income, long-term capital gains taxes due, but I'm going to, I want to say postpone. What did I say? I'm going to defer payment until September/October. I'm going to extend or defer my tax payments. And part of that is because, taking a quick peek, on this, for all intents and purposes, I've had a pretty good year. And you're going to notice that my year account gain subtracted from the 36,469 will be less than 27,500. Can someone tell me why that is? Why is it that when you subtract the 9067 from 36,468, it's going to be less? Anyone? Why is it going to be less? If you don't know, put a question mark in. If you don't know, go ahead and give me a question mark and just say, hey, I don't know. Well, on top of making a profit, what else do you have to pay for in trading? Commissions, right? Fees, you got to pay fees. So if you subtract this from this, it's going to turn out to be 27,401. So in this account, I did 7 out of the 8 trades that we showed you. I'm going to make a running total of them, and I'll get those out. I'm also going to get Hurley Academy up and going here pretty quickly. So I have already paid in 2 months. I have paid $99 in commissions or fees to open my trades and to close them. What else can I tell you? Well, $99 divided by 9,067. Right now, it's about 1% of my profit I've paid out in commissions. So is that acceptable? Is everyone okay with that? Would that be acceptable for you guys to pay 1% of your profits out in commissions? Yeah, you know what? I thought so too. but it keeps looking better because $99 divided by 7,600 was about 1.3%. And in all honesty, I don't start worrying about that ratio until it gets to be about 3%. If it's 3%, or if I'm negative, then I kind of beat myself up again. But as of last Friday, it was about 7,600, and it was 1.3% of my profits, and I was okay with that. So what am I in? Kevin, what are you in right now in what I'm going to call, it's my tax account, right? It's my big account. I wouldn't have 300 and some odd $1,000. I guess it's 233. I would not have 233,000 doing a bunch of spread trades. I'd have it collared. I'd want to go longer term. I'd like to do it in an IRA. So my big returns there are not taxable. This is a slush account. It's a play account. It's something that I would suggest you guys, if you're trying to follow some of this or looking at some of this, you do it much the same way. You do it where you take out a small portion, and this is your go after it, go get it, have some fun. Right now, I am in Bank of America long calls. At one point in time, I was up at a 65 or 85 long call contracts. I originally started out and my cost basis was $1.19. So I'm trying to give you a little bit of my history. My original contracts, I think there were 10 contracts, $1.19. I then went and I dollar cost averaged from 10 to 20. I added 10 more, right? I then went from 20 to 40. I added 20 more. And then I went from 40 to 85. And I added 25 more. Excuse me. I added 45 more. So, out of curiosity, is it working out? It's working. It is right now. Right now, it's working out. How can you tell that it's working out? How can you tell now that I've added 75 contracts? How can you tell it's working out? Because I'm doing it. Because you're rocking it. Yeah, okay. I appreciate the compliments, but here we need a number to justify what we're doing. You can't go to your wife and say, yes, I'm killing it. Yes, I'm rocking it. Yes, I'm doing it. Why is it working? It's a simple one-word answer. And it's probably simple. I'm probably tricking you here. It's working because, bingo, because it's profitable. But you need to take a look at the original positions. Well, Kevin, you could have gotten messed up. You could have really blown it. What the heck? I could have really blown it because my $1.19 times 100, geez, times 10 contracts. So my $1.19 times 10 contracts is 1,000. It started off at 1,190. And as I took a look at that, that's my risk. So let's kind of go to this. Bank of America looks great because it is profitable. But 10 contracts times a buck, so it's probably $1.29. $1.19, no, I think it's $1.19, equals a cost basis of 1,100 is basically $25. Divide that by 27,400, or it was 27,500 originally. 1125 divided by 27,500. It's equal to 4% of my portfolio. And if you take a look, if I bring up, I got rid of it. Why am I not liking any of this? Bring an apple. So if I look at Bank of America, and I have been in this for a while, I'm going to fill the chart 2 years because it was a leap. You can take a peek at how I'm setting up my charts right now. Boy, my internet's really slow. Pivot points, Williams percent R. This original trade started out up around here. Dollar cost averaged. Dollar cost averaged. Dollar cost averaged. It has not been an easy trade, especially for all of last year. In fact, at one point in time, to move into this year, I had to take these contracts and roll them out in time. The question comes down to, where is your risk tolerance? Because where is your risk tolerance? With real money, it's difficult. With fake money and a paper trading account, it's not so difficult. Right now, it's got a cost value of $18,750. And in all honesty, come on. Right now, $18,750 plus I have to add a $960 loss for a true cost basis of, well, let's do the math. 1875 plus 960, 2835. I have taken some shares off, about 25 contracts. So I do have a profit. But now if I look at this position, in fact, 25 contracts, 250 times roughly 23 cents, 0.023. I've got a $575 profit. So, looking at it right now, someone tell me, am I going to be, well, am I profitable? Let's work some numbers. Current value, 2650, I think is what we just saw. 2560. 2560 and I booked 575. Am I profitable? These are all numbers you should be working out. Am I back now? Hello, hello, hello. Guys, I apologize. Part of living in the mountains is really crappy internet service. So I do apologize. Let me just, I'll have to snip this out. I'll have to go buy some software to work on this, snip that out. But here we go. Am I profitable? Am I currently profitable in Bank of America? Sorry I got knocked out of there. Am I currently profitable in Bank of America? So if I do a little bit of math, right? I'm up my 575 I made. My 2560, if you take out the cost basis of 1875, is 1260. So 1260, let's make sure. 2560 minus 1875 is equal to 685, excuse me, 685 plus 575 comes out to, I just do this little bit of math here. Boom, boom. Equals 1260 minus 960. As of right now, I'm profitable $300. So why am I showing you this? I'm showing you this because too many people forget to add in some cost basis. Too many people show you, oh, I'm doing so good. I'm this, I'm that. And in real life, the numbers are not what they're supposed to be. That is the problem with education. It is theory. That's why it's important to have real numbers and people with some real returns that are not afraid to add in, by the way, I had this. With that said, take a look at Facebook. How am I doing on Facebook? How does Facebook look? And again, kind of easy. How am I doing on Facebook? Cost value, market value. How am I doing on Facebook, guys? If you don't know, type in a question marks. I don't think I'm talking to myself. I hate talking to myself. I hate losing audio and realizing, crying out loud, my internet's gone. Facebook looking good or not so good? It's a loss. What I paid, $8,642, is down $5,425. It looks awful. So it's kind of funny. You know what's in here are some of my losers. NVIDIA, am I doing good or not so good right now? It's also a loss. How about Under Armour? Good or not so good? Under Armour's good. It's up a couple thousand, right? Still have that bull put. Still trying to get out of this sucker at 30 cents. I could close it. I think it cost me, what, 67 cents? Took a credit of 67 cents. Could close it right now for 36.5 cents. So 67 minus 36.5. I could walk away with 30.5 cents. Staying in it maybe a little bit too long. Today's net gain, what's the total net gain? Yeah, it's a total net gain of $225. I could close it for a profit. The shares are doing me good. Well, Kevin, how are you up? What's up for you? Well, we got some other Facebook that was closed. We got Visa that helped out. There are some shares in here. There was some other Under Armour that I've closed. It's kind of funny. I'm down a couple $100 on NVIDIA, but I obviously booked a couple $100. And I've got some other contracts in a Schwab account. But this is real trading. And what I'm trying to show you tonight, what I hopefully am showing you tonight, always look at the whole picture and trust but verify. If I wasn't honest, I could have really pulled the wool over your guys' eyes. Said, oh, I'm killing it in Bank of America. Everyone should be doing what I'm doing. In real life, I've got to add the roll from last year into this year, where I took a $960 loss. Facebook looks ugly right now. On some shares, I didn't do too bad. On the leap long calls, I've already dollar cost averaged it. And why am I not going to dollar cost average it again? My portfolio's out of whack. It's almost $9,000. On a $36,000, 25% of my portfolio is Facebook. Yes, I've got till June 20, but my portfolio is out of whack. It's over leveraged. I'm in Under Armour. Under Armour, because I can add puts, it might not so be over leveraged. If I was to add some $22 puts, my risk would be 31 cents plus the dollar for the long puts. You know, I'd have 1,100 bucks, $1,100 plus 31 cents. You know, I'd have 1,300 bucks at risk on a $46,000 portfolio. I'm pointing this out because my Facebook, at least they're not $17 anymore. Yes, they are. At least they're not $29 anymore. They're down to 17. And I've dollar cost averaged with one, and then I've dollar cost averaged with two. So I've dollar cost averaged twice on Facebook. Could I have put some long puts in? Yeah. Have I yet? No, but will I at the next earnings? You better believe I'm going to spend some money on a couple long puts to try to protect the $5,400 that I have left in this $8,642 investment. So all I'm trying to show you tonight in regards to trade findings and adjustments is when you see something that seems too good to be true, it normally is. Hey, I'm killing it. I spent $1,875. I've already taken 45, I guess, contracts off. Taking 45 contracts off for 30 cents. It looks like I'm, up right now 800 bucks. I'm only up 300. Oh, your portfolio looks really good. Well, it's got Facebook that I'm worried about. It's got Nvidia that I'm worried about. Under Armour, my stock position, which I'm tempted to sell out soon or close to 23, has been my winner right now. That's been my big winner with some leap long calls on Visa. But that's my winner right now. When you're looking out there for things to help you, make sure you take in the whole picture. Make sure you get a true cost basis of everything. Don't just take it for face value. When you do your own trades, keep track of all your costs. Keep track of if you're over leveraging a portfolio. In all honesty, if you were to ask me what trade I would do today, the only trade that I would be considering was based on an earnings event target, but it only mattered if they were going to get above their 200-day simple moving average. That 200-day is at 76.21. And they finished at 76 even. 200 days at 76.21. They finished at 76 even. I would not be putting a trade on target because even though the chart looks like they're above it, working those numbers shows you they're not. Not to mention futures are also down. So for just comments and things to work on, things to think about, being smart, you don't always have to trade. You don't always have to get that deer in the headlight look and look at the next greatest and best thing. It's okay to be prudent in your trading. And part of being prudent is sticking by what you said you're going to do. This is gonna explode as I start to market this out to people. And I'm gonna have people that are gonna get pissed off because, well, I'm looking for a trade. And I hope they understand that when it's with real money and not in a paper trading account, there are times when it's good just to hold off. And what I wanted to do today, missed where it needed to get to by 21 cents to put the trade on. If I was looking for a trade today that I felt like I had to push out towards you, it might be target with a long put at 76. It'd be some shares. It'd be some shares where I'm going to protect it at that 200 day that it can't seem to get above. And if it does get above it, well, then we're up to the races to about 82. But it's okay to work your numbers, and it's okay to have your numbers tell you, you know what? Maybe not the best thing to do is go force something. Any questions on tonight? Other than why my internet conked out there for about 4 or 5 minutes. Actually, questions or comments. Give me questions or comments because I'm going to be trying to market this out to a bunch of people. Questions or comments. What can I do that's good? What can I do that maybe you'll give me some insight that maybe I should do a little differently? But please don't mention the internet conking out. I think it's valuable for people to get little nuggets of information, and I think it'll be important for people to have access to a registered investment advisor. Can he answer real questions and open up real portfolios? All right, I don't see anything coming in. With that said, I'm going to wish you guys a good night. I look forward to talking to you on Thursday. I think it's going to be 10 o'clock in the morning. Bank of America, trade I possibly would consider exiting if you are profitable and carrying negative theta. I am on both of those, but I do think I think I've got that run up to 30. So in all honesty, I'll probably exit another half closer to 29.80 and go down to only 20 contracts and then run those through the next earnings. And if I need to, I've got money again to dollar cost average. Really, Bank of America makes its biggest runs mid to end August through the end of the year. And I've seen it do a 50% run, a 35% run. That's kind of what I'd be looking at. And that's why I would take half of them off, but I'd be looking to add half of them back on June, July at a low and see if I can't get a run August through December. But a good point, Abraham. All right, guys, have a good evening. I will talk with you later. Bye-bye.